Hi, I'm James, Deputy Chair of Insurtech UK, and this is another virtual Fireside COVID-19 chat with one of Insurtech UK's latest partners, the venerable and worthy law firm Clifford. I'm joined today by Ashley Prebble, who is a corporate insurance partner at Clifford, and apparently a guru on all things insurance as well. So it's going to be great to chew the fat and have a geeky conversation about insurance. Ashley, nice to meet you. Do you want to just introduce us a little bit to you personally? And then we'll go into kind of Clifford and other things. Tell us how your journey's led to being a corporate insurance partner at Clifford.
Good morning, James. Great to speak to you. And so my story into insurance is probably the same as everybody else's. It's sort of by accident, not by design at all. When I was a law student, I was thinking about what I wanted to do and had the opportunity to do insurance modules at university, which I avoided like the plague, although that's not the right way of putting it now, obviously. But and then when I went to take my training contract, I went through various seats, and including corporate, and again saw the guys in the big chalk striped suits, and thought that wasn't for me at all. So that didn't want to be a corporate lawyer, didn't want to be an insurance lawyer. And then I joined a small team, which was sort of a team outside of sort of the mainstream corporate practice, which did insurance work, and they had a bunch of clients in the Lloyd's market. That was really a unique time in the Lloyd's sector, where they were starting to raise new private capital. It was quite exciting, new businesses starting, quite a lot of entrepreneurship. And that really excited me. And so I got involved in that small team and then started and qualified into that as a young lawyer. I really took things from there. So now I sort of find myself at one of the largest law firms in the world, partner heading up the financial institutions group in London. I've worked in the insurance market now for 25 years. I love it. I love the people. I love the product. I love what it does. Which again is we'll talk about that a little bit later, quite an unfashionable thing to say, but I really do believe that it sort of serves a social good used in the right way. Yes, and that's my sort of story of a roundabout to being a partner at Clifford.
Well, yeah, I mean, I think I'll cry exception to the rule. Actually, I did plan to go into insurance because my family are in it, so the apple fell close to the tree. But I agree with you, the sector is an accidental destination, but a wonderful one. So tell me a little bit more. We've mentioned about the size of Clifford. Now, hopefully everyone watching this video will have heard of the name. It's an amazing brand in the legal sector. What's Clifford Chance's role in the insurance industry at the moment? Can you go into a bit more detail? And secondary to that, what has been the exposure so far to Insurtech at Clifford Chance?
Yeah, so when I talked a little bit about my personal history, that was really the start, not me joining, but that sort of time period was the start of law firms thinking of it as insurance as a separate sector. A lot of financial institutions lawyers looked at the bank sector, and that really was as far as it went. But that sort of innovation started around about that period of time, 25 years ago. Clifford Chance at that time, even though I wasn't at the firm, was at the forefront of that. One of our partners, Catherine Coates, for example, set up one of the first specific corporate and regulatory insurance units. And that has grown to a team globally for us of around about 200 lawyers. Our largest presences are in our London office, our New York office, Hong Kong and Singapore, but also lawyers across continental Europe. And we all work in the sector, predominantly on the insurance carrier side. So my particular team, we do everything apart from claims. So that's corporate, M&A, joint ventures, distribution agreements, regulatory advice, structuring advice, and that comes across. And so we understand the global regulatory and legal ecosystem. We understand insurance businesses and how they work. And I think that's really been part of what we've done. It's a very important sector to the firm as a whole. It's a significant part of our revenues. And I think within that, what you have, therefore, is a very, very close working relationship with regulators and the industry sector. This has come through in the last few years, where we spent a lot of time, for example, with the London Market Group, who represent, as you can imagine, the London market. And we have been working alongside them on a variety of different market initiatives. So one of those being insurance-linked securities, another being the market response to Brexit. And then has a natural segue into the trade arrangements between the UK and other countries around the world, which we're also supporting them on. So we have that really sort of broad sector understanding as a result of that type of work. We invest a lot of time in understanding how the industry works and understanding really what's going to move things forward for the sector. And that really sort of takes us into the Insurtech business. I mean, we've obviously, people debate what Insurtech means. And I think because we've worked in the sector for such a long time and seen so much change, we probably don't really see Insurtech as something that happened in the last 5 or 6 years, or even 10 years. It's always been there. I remember, one of my first clients that I picked up was the Admiral Group, and I picked them up when they IPO'd. If you speak to Henry Engelhardt or David Stevens about Insurtech, their response is going to be, well, we've always been data driven. We've always used big data. We've always really thought hard around what's the best channel to get to our customers. And I think that's now the internet, but they went through various permutations, without, they set up confused.com, the PCW business, which I think, when you read around Insurtech in the US, for example, they talk about comparison websites as if they're a great Insurtech innovation. So, I think you've got to try and put it, and we can put it in that context, but we do a lot of work in the area. We have, as you can imagine, sort of working with a large number of the incumbent insurers, but also with some of the smaller Insurtech businesses at different stages in their life cycle, providing some of that regulatory advice, helping them to understand how they may go about obtaining their licensing, how they may contract with and enter into distribution arrangements or funding arrangements with insurers or third parties. So yes, it's absolutely part of our work and our ecosystem, and we're very interested in it, of course.
Yeah, I think you're absolutely right about technology always having played a role in insurance, and often it's one thing I'm at pain to talk to about with my incumbent colleagues. Insurtech is about having a startup cluster. It's about new thinking and innovation as well. It's not about trying to, own that technology and innovation piece from the past. I actually think some of the best innovation chats are from colleagues who've been in the market a long time, because when you didn't have technology, what did you do and what worked and didn't work? And I think that leads us neatly rather into the next question, which is about how the market's outlook might change on technology going forward and how aggressive they'll be on it post-COVID. Have you, in your experience so far throughout this crisis, kind of seen any shifts or changes in perception on a strategic level when it comes to using technology? Or is it, as you've mentioned, it's the same consistent message that's been there from day one? And does that need to change as well, in your view, if that's the case?
Yeah, I think it's a fascinating question. I think whenever you see an article about Insurtech in non-insurance trade press, the first paragraph is always, Insurtech is 10 years behind fintech. And this is because insurance is an incredibly slow-moving industry and resistant to change, etc. And that first paragraph writes itself. And I think we're probably all bored of reading that around the industry. But notwithstanding that, there are some pockets of truth, obviously, in that. And there are definitely some sectors within the market or parts within the market that have been resistant to change. Again, my personal history, one of my first clients as a very junior lawyer was a business called RI3K, which was one of the first online trading platforms designed for brokers and underwriters to interact and contract online. And that faced significant resistance from the market communities. And I think really what you're seeing now, coming back to your question, is this is a trigger event. This is an accelerator. I think catalyst is probably too strong a word, because there was definitely significant developments going on. But I think what it's done is acted as a catalyst, and I think made the skeptics or the slowest movers in the market realize that they can't afford to resist this change. So if you take the London market and the use of PPL, I think there was some resistance still to the use of that platform in the market, in the most traditional part of the insurance market, which is probably the Lloyd's, the London sector, to using that technology. And that's changed completely. Users have shot up 40% in the first few weeks post-lockdown because they had no other option. And so I think that's really what you've started to see. And I think as that has come on a bit, then you're going to start to move into an area where the operations part of the insurance businesses and the technology parts of the insurance businesses become merged and morphed into one, rather than being separated, where I think they are still in some organizations. You're also starting to see people think about alternates. So I talked about PPL, and that's been very successful in terms of numbers of users and the trades going through that platform during the course of lockdown. But there's a competitor in that space now, white space. Now, again, that's been there, but its profile has raised significantly during this period, and it's getting great reviews from users, and it's starting to operate as, the question that needs to be asked is, what's the best platform for the market? Not what is the one that's endorsed necessarily by the incumbent insurers or the market itself. Is what's the best platform for the market? So I think that's what we're starting to see. I think we're seeing greater trust, faith, but also it's a need. I mean, it's essential now. So it's become there is no option. So everyone in the business who's been encouraging the C-suite to move forward are now finding that the C-suite can't resist.
If I go into an analogy, VHS versus Betamax, that issue of what's the best tech for the market might actually be a moot point, really, because it's not always the best, is it, in inverted commas, in hindsight, that wins the race. So it'll be interesting to see that. In terms of the market, what areas do you think need improving the most, and therefore what areas are there opportunities for startups? And I'm going to expand this question slightly, because being the sales side of Insurtech myself, I know a lot of startups that work with the industry as well. The deal cycles are absolutely huge. Do you see a situation here where, if there are clear areas for improvement and appetite to adopt technology, and therefore opportunities for startups, do you see a situation where actually the incumbent sector is going to be more willing to procure from companies that wouldn't necessarily have been trusted partners before due to their size and resource status? I think there's a good example when Lloyd's went through its modernization program. The tender went out to giant companies on programs that startups didn't have access to or knowledge of the tenders. So, my concern, obviously, as deputy chair, is that we don't lose the opportunity for lots and lots of great startups and stakeholders to add value to the sector. But in reality, if the areas are there for improvement, Ashley, can insurtechs have that effect, and what's the mindset the insurers and incumbents have on dealing with them? Tell me a little bit about that, because you're the lawyer, you'd be the one writing the contracts, right?
Well, I think what you hear a lot, from incumbent insurers is the need for insurtechs and the ideas that come to them to be value generative and to fit within their ecosystem. So that may mean, I think, sometimes that fantastic ideas don't hit perhaps the second limb, or they can't hit the first limb quick enough. And I think you hear this a great deal, and you hear it actually particularly from the newer insurers, I think, who come through, and they're almost setting up their own ecosystem. So a Convex, for example, you hear that management team is a heavily outsourced model. So they're looking to partner with others. But what they've tended to do, I think, is partner with significant players who may potentially sub-outsource themselves. But you've got to really look at someone's model, understand their ecosystem, understand what they're trying to do, and then it's perhaps easier to fit what you've got into their system. And what are the areas that I think are ripe for more investment and ideas? People come back to the London market, and so you're thinking about businesses that probably haven't embraced technology. Some of the Lloyd's businesses perhaps slightly smaller than others, so perhaps can look to partner up with smaller businesses. So what can they do within the Lloyd's infrastructure? I think that's very interesting. You have the Lloyd's Lab. I'm sure a number of your members are aware of that. Are there opportunities within there, or is it always just going to go out to the larger tech facilitators? The other piece, I think, of course, is the life and annuity sector, which again, you read about and you listen to. They perhaps are lesser thought of, I think, by insurtechs. I think there's a natural gravity from ideas people to go to the non-life sector, partly perhaps because they understand it better, or when you think about it. But you look at the large numbers of people who are playing in the homeowner, flat share, ride share, without using almost sort of the Gen Z millennial type concepts. But I think that's what a lot of people think about when they think about insurance. Whereas I think the life and annuity space also really is, has a great amount of opportunity there if people can sort of look at those and engage with those businesses and engage with those companies.
Yeah, I agree with you. Actually, some of my favourite Insurtech members are the ones that are looking at the specialty route, like ULife, doing life, and Consiris. I think I pronounced that correctly there. Who are in marine, which is something I started off in. So, I absolutely agree. There's huge areas for view. So, I mean, it's good to hear that there's an appetite changing in the market for working with Insurtechs. I guess the big question here, as we come onto it, we alluded to this earlier at the start of the chat, is the perception of the whole sector. Insurtech is somewhat in the gravity of that. How do you feel insurance has been influenced by COVID? With there's obviously the elephant in the room of the test case at the moment, but can Insurtech play a role, whether it's in branding or culture or even experience? Can it play a role in helping to reshape or change any perceptions that may or may not be negative, depending on what your view is about to be?
Yeah, well, I mean, let's take, I guess, the positives. So the positives, I think, is the sector has proved itself to be very resilient. I think you've had a number of businesses who've been able to, particularly on the retail side, to continue trading relatively seamlessly. Yeah. A lot of them have operational resilience, business continuity plans, which have been in place. So I think the more tech savvy or the tech ready businesses have been able to operate through this time. And I think, let's talk about the BI issue to one side, but if you take the rest of the industry, I think it's survived, more than survived, proved resilient and responded to customers. And you've also had, some phenomenally positive ethical decisions made by some insurers, the motor insurers who've returned premium, for example, voluntarily before the regulators have asked them to do so. Now, you might say to yourself, well, that's obviously the right thing to do, but that doesn't come necessarily naturally, and not everyone thought of it in that way. So I think you've got that piece. But you're right, there's, the elephant in the room is the business interruption response. I mean, I think to look at this from a consumer perspective, I don't think they're going to understand or really respond to the complex legal debates around causality and whether or not, what is the real purpose of insurance in these circumstances. I think you've got people with, their SMEs, with small businesses who are looking around for someone to save their business. And I think instinctively they would have said, well, the government's providing me with some support. I've got an insurance policy. It was designed for this type of thing, as far as I am concerned. And that would have been enough for them. So I think the response from the insurers to this is going to cause them difficulty. Now, obviously, from the insurer's perspective, you can understand their response as well, which is, this is not the type of peril that we underwrite. We can't underwrite this type of peril. This was unprecedented, and the response, the full governmental lockdown is not something that we would normally insure. So you've got this difficulty, but from a public perception perspective, there's only one winner there, unfortunately. The FCA case, I think, also adds a dynamic to it. I mean, from a press reporting perspective, it's, again, almost unprecedented for a regulator to be fighting against the insurers and the community that it regulates in this way. Now, the FCA were doing this for good reasons, but again, from a public perception, it feels like you have a governmental authority, a regulatory authority, being very clear in their views of the poor behaviour and the poor decision making within insurers. And this is an adversarial environment, the UK courts. So I think it's very difficult for the insurance industry to come out of this well on the BI side, even if they are successful in this case. It just feels like a lose-lose. Now, I don't think they had an option. I mean, the capital implications, obviously, of paying out under all of the BI policies is significant, but it's a very, very difficult one from that perspective. So then what do you do? I mean, there is this gap, and there's always been this gap in insurance. I think you see it in some of the adverts you hear around reinforcing the message that 98% of claims are paid. Whereas I think the customer's perception of insurance is, well, they're just waiting for an opportunity not to pay me. And so I think you've got this piece, and Lemonade used this language. We'll talk about Lemonade in a moment, the trustworthiness of the product. And I think that's obviously an area where, if you are looking to enter the market, you've got to have a proposal that really deals with that trustworthiness point. Being an ethical insurance, that's the piece, I think.
Yeah, the trustworthy piece, that's the word that always resonates for me. If you're giving someone something that's yours and hoping they give it back to you when something happens, trust is
Yeah.
the key dynamic there, isn't it? And if they're strangers to you, I guess that you trust them less. So there's been lots of debate, hasn't there, about that personal relationship. And I think that moves us on to Lemonade, which fits really nicely. Is one of the things I think they've done well is build a brand that looks and feels friendly and available and trustworthy, and that may be their magic ingredient. But there are obviously, it's got its lovers and its haters out there in the market. There's Twitter accounts that troll it and everything else. But I think it's been a successful IPO. I'm sure you'd agree in terms of returning for its shareholders. What does that success for Lemonade mean for the UK Insurtech sector? Because as you rightly pointed out, the perception in the US of what innovation means is our 15 years ago in reality. So Insurtech in the UK should be well positioned. But are we seeing, from the global wins that Clifford Chance are, available to, any change in perception for UK? What does it mean for our sector, the fact that Lemonade got there first to IPO and become, multi-billion valued?
Well, I mean, as a start, it wasn't a space race, I don't think, unfortunately, actually, in many ways, between the London market and the New York insurance market. I mean, and it should have been, I think.
I agree.
It's disappointing. It's great from a Lemonade perspective. It's disappointing that you and I can't talk around, well, there are these 4 businesses in the UK who are this close to doing something similar. I think you've got to ask yourself questions. Why is that not the case? But what does Lemonade mean? Well, I think it should really make people within the sector, and I think that's the entire ecosystem. I think that's the UK government. I think that's the regulators. I think that's really people who are like us who are operating in the sector. Why has this not been the case? What are the US able to do, where it's not just Lemonade, but they've got 2, 3, 4 others who are lining up behind? Why are they not being able to do that? Is it a lack of ambition from the Insurtechs? I don't think so. I don't think it's a lack of ambition. Do I think it's because they've not had the best ideas, the right ideas? I don't think that either. I think there is something within the ecosystem that is acting as a barrier to that level of ambition and that level of innovation. The two things that I thought.
I think maybe actually you stumbled upon it at the start of the call. Insurtech has been a thing in insurance for a long time, and we've had a very competitive sector before the startup system kind of galvanized. And obviously it's had to work with the sector, and startups need to be able to move fast. And if you have to work with a sector perhaps that's slower moving and already very competitive when it comes to acquisition costs, that potentially creates a higher barrier. And you'd think, wouldn't you, out of that, if startups can grow and scale in that environment, they're going to be very battle hardened for the US environment, which has its barriers between states, doesn't it? So do you think that's a factor? Is it the fact that we had such a strong incumbent sector as it was, that the startups coming out of this system are going to undergo a different trial, in effect, as Insurtechs in the US?
I think so. I mean, what you've certainly found from the UK perspective is the MGA model is the one that, from the Insurtech's perspective, particularly those who had an ambition to build a viable standalone business, the MGA model became their default option. And so I think when we first at Clifford Chance were talking about Insurtech, one of the first pieces of, I look back on my first set of slides on this about 8 years ago, and sort of the first line on it was collaboration. And the reason that collaboration became so vital to Insurtech, because we recognized quite early, I think everyone in the industry recognized reasonably early, that a full disruption on a sort of Monzo, Revolut type level was incredibly difficult in insurance. The barriers to setting up a new insurer versus even setting up another different type of financial institution are very, very high. And so as a result, the Insurtech businesses were almost sort of forced down the MGA route, forced in some ways to collaborate. Now that's a great thing. I think incumbent insurers and Insurtechs complement each other, but that doesn't necessarily mean that should be the end game. And I think that almost has been one of the real drivers as to why the UK Insurtech industry has ended up looking like it ends up. So in the US, perhaps, is it the case that Lemonade, full stack insurer, they're able to say, we can get the funding. Now, I mean, we can talk about Lemonade's funding, pattern their history and how that came into being, but to put that to one side, they were able to set that vision straight away and say, this is what we want to do and achieve it. Could Lemonade have done that as easy in the UK if this is where they'd chosen to start up? Or would they have said to themselves, that was our dream, that was our ambition, but just can't do it. We're going to have to, tuck in and go down the MGA model, sit with capital from a third party and work to their rules.
Actually, you and I are very similar page here, and I think this is our last question. I think we should spend some time on it because it's about what needs to change through the lens of UK Insurtech. And I kind of agree. I think no one is suggesting that collaboration between Insurtech and incumbent isn't a good and viable choice. It's, as you said, it's the fact that it was so overwhelmingly easier than becoming a PRA authorized insurer. You haven't seen that real threat. And I think when there's not a real threat, there's not a real serious viewpoint from the incumbent industry either. I've definitely had conversations with certain CEOs that have really, seen Insurtech as an innovation marker as opposed to something that they have to engage with, or it's, existential. And I think that power dynamic definitely has an effect. Would you allow me to suggest something? I think at the moment we're going through what I would call the cover crunch, which is our previous question about BI insurance. This is an insurance crisis above all. And the peril is obviously huge, and the risk was triggered by a government lockdown. That's caused lots of problems because that's not what insurance was designed for. In the credit crunch, obviously it was a banking sector problem, and the banking sector has effectively a lender of last resort. But when the insurance sector looks to its supply chain, the reinsurers were arms up and saying it's not covered, and obviously government is the next step. Do you think that this, aligned with the PRA issue, is an opportunity to have a really big strategic conversation about insurance? Because had there have been more PRA authorized insurtechs, we may have seen them taking a different approach on paying claims and really standing out. But the market is kind of stuck in its ways, isn't it? What needs to change, basically, from the regulatory perspective, actually, to take the cover crunch forward? Because let's look at the remediation from the credit crunch. Billions of quantitative easing were placed on balance sheets of banks to effectively recapitalize them. We can call it monetary policy all we want, but it's made up money from the magic money tree. And there isn't a magic money tree at the top of insurance. And on the other side of the fence, there was a competition fund set up for a bailout. Now, let's say that the insurance industry wins these test cases. There isn't going to be a need potentially for a bailout, but there is a potential need for a competition environment where insurtechs could more easily go to the PRA. Do you think those three things aligned ask some challenging questions of insurance through the legal lens? How do we do this when the circumstances are very different in the cover crunch?
So the other one that I'd add to that mix, I mean, look, I think you're right. I think there's this potential impetus for some change. I mean, the other piece here I think I'd add to it is Brexit.
Yeah.
We think about it from a UK lens, so I looked at this recently because I've been talking to a lot of people about this particular point I'm going to raise for a number of years. And it's one that's probably resonates with some in the industry, but it does not resonate with regulators. But there have been 10 new insurers authorised in the UK since 2013, when the POA and the FCA were set up. When the FCA was split into two businesses: the conduct regulator, the FCA, the capital regulator, the POA. 10 is phenomenal in that period of time. Now, I've sort of excluded two because they were Brexit setups. But out of those 10, you look through the names on that list. I mean, they're all, I think 7 or 8 of them are just subsidiaries set up of large insurance groups. And then you've got the Fidelis and the Convex insurers who come in as genuinely new insurance businesses. But it shows you how high that barrier to entry is. The PRA have recently set up new insurance startup unit and a new banks startup unit. I don't want to be rude, but what's that new insurance startup unit going to do? They do, one new startup per year as it stands. And why is that? You've got some barriers to entry that are there. Solvency II has got significant capital requirements. And, whilst in the EU, the UK can't derogate from Solvency II. So post-Brexit, are there opportunities for some change? The second piece is, how is Solvency II implemented? Implemented in the most aggressive way during the startup process means that the capital requirements are even higher than actually required because they're asked to, well, actually, we want you to hold 140% of capital, and we want you to look forward 3 years, and we want you to therefore hold capital based on what we think your 3-year look forward might be, for example. These are the type of conversations. So that's not what Solvency II says. That's a regulator's gold plating of Solvency II. Shouldn't the regulator there have an objective to enhance the competitive standing of the UK insurance market, to balance out their safety and soundness objective? Because if you just have an objective, which is to preserve the safety and soundness of an insurance market, you will never take a risk. You will never affirm a new full stack insurer startup other than with a £500 million plus backing. That I think is something that potentially has to change here and be looked at here, because you need to have regulators and governments working in tandem to support an industry that can innovate. That barrier to entry is much higher than it really needs to be. And I think that's one of the things that needs to change. Certainly working with the LNG, we've been putting questions into Parliament, I think, asking more and more questions around this, what we call the balancing objective, this competitive element of the UK market objective. And I think that will help the Insurtech sector. And I think it will help that engagement with the PRA.
Well, Ashley, if I had sound effects, there would be fireworks and applause and all sorts of things. No, I completely agree with you. And, for the viewers of this video's purpose, we'd love to engage more with your work with the LMG as well. I think that's one of the things that appeals, because we've spoken to the PRA, and there's some really open and, and I'm going to be very diplomatic here too, because the regulator has a tough job. There's some very open minds that end. I think that the strategy is the piece that's lacking from that picture, and they need reaffirming on what the strategy of the UK financial services will be post-Brexit. And you're absolutely right. That comes from Treasury and the regulator and the sector all meeting and speaking. And, I won't promote some other things that I'm working on with the sector, but there's certainly a whole movement being triggered by COVID to do with reinsurance. So, my emphasis there would be that the sector really needs to have these conversations that we've had today. So it's been nice to put the world to rights with you. I think from that perspective, we've gone through all the questions. Is there anything else that you'd love to share to do with Clifford Chance's work and interest in Insurtech going forward for viewers and members that we can just quickly give a shout out to on this video?
No, I think there's a perception. I mean, we've talked about the perception of the insurance sector, and there's perception, I think, of law firms like Clifford Chance, I think, seen as very expensive, big beasts that are very hard for smaller businesses to engage with. And I think that's not the case. I mean, we're very open. We're able to support businesses, answer initial sets of questions, get to know people. And that's really where we're at in this sector. And that's why we're a partner with you guys. And I think that's why that's really important from our perspective. So, please feel free to contact, please feel free to engage with us. We can talk through our ideas, just a conversation. We don't sort of get the clock running straight away on just having a chat with people. So, please think about us in that way.
Fantastic. And I would encourage everyone to reach out. Ashley's on LinkedIn, I think, but I won't give you his email address or any other GDPR details. He is a lawyer after all. I don't want to break those rules. Ashley, thank you so much for your time. I think there's some great insight there. And, I hope the members enjoy these fireside chats. We know that they're better face-to-face, so we look forward to shaking hands and having, a glass of something cold with everyone soon. Hope everyone's safe and well. Other than that, this was our Fireside with Clifford Chance, Insurtech UK's latest partner, signing off. Thank you very much.